All right, let's go ahead and get started. Good morning, everybody. My name is Matt Martin. I'm the marketing manager here at Reserve Advisors. Thank you for taking the time out of your Friday to meet with our team here. I look forward to speaking with you on the topic of structural integrity reserve studies. I have a couple of quick housekeeping items I want to cover before we get started. I'll turn it over to today's speakers. First, today's webinar is being recorded. We will send an email out to everybody that registered with a recording to the webinar and a PDF copy of the slide deck, so you'll have that for future reference. We do have a pretty large group today as well, so we have a Q&A functionality in the presentation. If you haven't used Zoom before, you should see a Q&A icon. You can click that there. Throughout the presentation, if you have any questions, feel free to drop those there. Matt, Travis, and myself will be monitoring that, and we'll be answering those questions. If not throughout the presentation, we'll have some time on the back end to go through those and make sure we answer all of the questions you might have. So without further ado, I'm going to go ahead and get started here. So we have four areas that we wanted to focus on today with the presentation. First, we're going to have a legislative update from Travis Moore. And then Matt Queasley from Reserve Advisors is going to speak on the financial impact that SIRS is having on community associations that have gone through the process already. We're going to cover a few frequently asked questions that we're hearing in the marketplace. And then, as I mentioned earlier, we're going to turn over for Q&A. So without further ado, Matt, I'll go ahead and turn it over to you to introduce yourself.
Yes, thanks, and good afternoon, everyone, and happy Friday. My name is Matt Queasley. I'm the Regional Executive Director for Reserve Advisors. I've been doing reserve studies for 24 years now. Our firm's been around since 1991. We work with about 3,000 associations in the state of Florida. So I'm excited to share today some of the work that we have. I'm a reserve specialist. I'm a professional engineer in the state of Florida. And also I have the pleasure of being a condo board member, like many of our attendees today. So I'm on the board of my small condominium in Tampa that also requires a SIRS and a milestone inspection. So I look forward to sharing what we've learned through this process, and you'll hear more from me later, but I'll turn it over to Travis Moore.
Thank you, Matt. And thank you all for joining, taking your lunch hour to spend it with us. As Matt mentioned, I work with the legislature, and we are in the middle of our legislative session right now. We only have 2 more weeks. Starting next week, we have 2 more weeks left. It ends March 9th of the session. A lot of things have moved through the committee process and are now in those final couple of days where the floor activity and bouncing back and forth between the House and the Senate occurs before something passes, and if it does, goes to the governor. Regarding the SIRS, and there's a couple of bills that you kind of need to focus on that are in play as it relates to condos, one in the House, one in the Senate. They're what's known as companion bills. Ultimately, the legislature, both chambers have to pass the same exact language, identical language for it to be sent to the governor. Right now, the bills that we're dealing with, Senate Bill 1178 and House Bill 1021, are not the same. They're they're getting closer. They're going to be heard. The Senate bill has one more Senate committee to be, and it'll get heard next Tuesday. They'll even get a little bit closer at that point. And then there's some things that still need to be worked out as it kind of heads to the floor. The thing, I think, most important thing to keep in mind is that this, unlike the sprinkler retrofit issue of years gone by, that maybe many of you experienced or lived through with the 75 feet and higher have to retrofit with and the engineered life safety system and all of that, where the legislature kind of kept kicking the can down the road. There is nothing that will pass in the next 2 weeks that's going to extend this deadline. The deadline of having to have a structural integrity reserve study done by December 31st, 2024. The bills, and they kind of called them, they started kind of initially early on, we're calling them Condo 3.0. This is kind of how, in a nutshell, the history of how this kind of evolved is that after the legislature passed last year the creation of or kind of fix what they did with in 4D in that special session, creating these milestone inspections and these structural integrity reserve studies. They passed Senate Bill 154 last year that set up these deadlines. They then began going around and listening primarily in South Florida to folks, and really it was set up as these town hall meetings to explain to them what they did, what full funding of reserves means, et cetera, whether or not you can use the pooling method, all of that. And they started to hear, the horror stories that have been out there for really decades regarding condos. And the thought was, wow, we are getting ready to implement and push a lot more money into the system and a lot more things that need to be done on condo world. And we've got a problem with access to records, with DBPR not doing, they're only having jurisdiction over a small amount of things, not even having jurisdiction really over much of this type of activity. And there were some concerns. So they filed legislation that really only deals with condo reforms. So whether it be managers in Chapter 468 and how they share records amongst each other when there's a termination of a contract, management contract, conflicts of interest, how those have to be disclosed and dealt with, et cetera. The really, if you look at the bill that'll end up passing, it could have been a bill that passed 5 years ago, or certainly before Surfside, before any of these the SIRS activities were mandated upon condos. So do not expect, if you're sitting there thinking, I don't have to do this because the legislature, they weren't really, they'll say, just kidding, and they're gonna change things. That is not going to happen. Now, maybe next year when everything kind of hits the fan and people, if there's, that's another year and it'll be another legislature after another election, other, new leadership, et cetera. Maybe that's a different story, but certainly nothing before this deadline of December 31st, 2024, is going to change. That's going to say you don't have to do this, or you don't have to be reserving. So be ready for that. The one piece that we're still working and trying to have is an understanding that maybe if you're under contract, you've at least, because we really have a massive universe of people that have to do this, a very small universe of people that can do it for you, like Matt, and just the math isn't gonna, it doesn't pencil out. So one of the things we're trying to say is look, you haven't ignored it. You haven't said, I'm not going to deal with it. It's going to go away. I've at least got it under contract. Matt and his team can't get there maybe until, March of 2025 and get this done for me. It'll be done for my budget meeting in October, but but you've at least been under contract. So we're looking at that. I'm not even sure, as of now, the House has been resistant to even that because it looks like an extension of a deadline. It looks like, people aren't going to do it. So that's still in play, but again, not don't hold your breath even on that. So we're trying to figure out ways of saying to DBPR, look, here's at least the people that have gotten under contract. So we're working that. There was language that was even, to provide for things to help with the financial impact of what you then will face when you do this. And that is, lines of credit, other different things. Again, those aren't going to happen. So just be prepared as you are looking at getting under contract for this, getting this done, getting a blueprint for how you need to move forward with your budgets. And so I think you're doing the right thing by even being a part of this webinar today. So that's commendable. But I just don't want anybody to think the legislature is going to come in and make some changes. You can track those bills that I mentioned. The best tracker, it really is a good tracker, is the Senate version, and it'll track either bill for you, and that is found at www.fl, like Florida, Senate.gov. flsenate.gov. So www.flsenate.gov. You can just put in the number there at the top. You know, you don't even have to put SB or HB because it knows whether, if it's an odd number, it's House, even number, it's Senate. You can just put in 1178 and then track it, and it'll give you updates. You know, either through email, through text, however you sign up to get your updates on that. And you'll see the changes as they're being contemplated. Matt, is there anything that I might have missed that you think I should cover, just being mindful of our time, and certainly can pick up more in the Q&A?
Right. Yeah, there's a lot of moving parts, I know. So that's I think you did a great job there. I think the one thing we saw just this week from the House was a request to have the division actually report every year on which associations have had the SIRS done. So we'll see if that goes further. And then the other thing that they did not have in the prior bills was a requirement to disclose the SIRS to owners. And I think, is that in both bills right now, Travis, that the association must at least send out a notice to the membership that the SIRS is on file, at least, or send them a copy?
Yes.
So
That disclosure notification, I guess would be called, is in both, right?
Yep. So just generally, I feel the thrust. Tell me if you feel differently. Is really just towards more transparency, making sure the boards are disclosing more information to the owners. There's a whole bunch of reactionary laws, I think, in there regarding the hammocks and the disaster in Southeast Florida, where there was criminal activity by the board, but they want to really make sure that doesn't continue, like you had said earlier, just kind of building that framework of the boards a little bit stronger, so that people aren't abusing.
Right. Yeah, there is and that, you bring up a great point when you mentioned the hammocks, it triggered. There is another bill dealing with HOAs. The one I mentioned now is just condos and co-ops. There's another bill, and it's kind of on life, on like life support, but there's a few HOA bills, but the ones that I just happen to know are most likely to pass. It would be Senate Bill 7044 is the Senate bill. And then I just want to make sure I've got the right number. And these deal just with HOAs. So again, don't have anything to do with SIRS or milestone inspections or the like, because HOAs don't have to do that. But they deal with things like, adding websites. The condo bill reduces the threshold a number. Current law says you have to have a website and here's all the information you have to post on it for access to records. 150 units or more, that's going down to 25 units. If you have a condo of 25 units or more, you'll need to have the website and manage it according to the law. In HOAs, they would set it up for the first time, and it would be at least 100 parcels would be the threshold there. But that's the one that deals with similar, conflicts of interest, criminal penalties for willfully and knowingly falsifying records and withholding records and all of that. And that deals with the HOA side. It's 7044 is the Senate bill, and the House bill is 1243. I think what'll end up happening is they're going to end up using the vehicle 1203, sending that to the Senate. I think the Senate will strip all that language off, put in the language of 7044, and send it back to the House. And then it'll be up to the House to either take it or leave it, because it's got a lot of stuff in it right now. This 1203, which is very controversial, dealing with everything from parkings to vegetable gardens to clotheslines to all kinds of things with HOAs. And I just don't think you have to get a vote to even enforce a lien for unpaid assessments. I just, that doesn't seem palatable to the Senate. So I think they're going to strip all that off and put the language of 7044 on.
Great. And just another reminder, if you joined late, these are bills that are proposed. None of these have been passed or approved or are not law currently. So we always have to be careful and projecting this information that it's not officially the law yet, and we're keeping a close eye. We'll know more in the next 2 weeks as the session wraps up March 9th, like Travis said. Okay, I wanted to share a little bit now about what we've learned, the financial impact. I know that's already seen a couple of questions in the Q&A about this, about fully funding reserves, and do we have to have fully funded reserves? And what we're seeing, we've conducted hundreds of structural integrity reserve studies at this point throughout the state of Florida. Here's a little representation of where our associations are kind of located, the ones that we've done SIRS for, quite a few in the West Central Florida area where I'm located and Travis is located, quite a few in the South Florida, less in the Panhandle and Northeast Florida, but a variety of ages, quite a few built in the 2000s. We saw not surprisingly, the large number of associations increase in that time frame. All different sizes of buildings, from 70-story towers in Miami to 3-story buildings throughout the state. And so you can kind of see the distribution of this data. I'm going to show where it comes from, large associations and small associations. Matt, you want to go to the next slide? Yeah, so ultimately what we've learned, we averaged, like I said, the hundreds that we've done. And I want to preface this, the associations that we've worked with and that we've done studies for, many of them are on the more proactive side. Many of them have been existing clients of ours for many, many years. So many of them are currently budgeting reserves at a healthy level. You can see the data we compiled. These numbers are on a per owner per month basis. So currently what we've found is that associations, this last year, we're budgeting an average of $143 per month per owner for reserve contributions, and that's in total. Now that we have the structural integrity reserve study, we essentially have 2 buckets of reserves. One for structural items, which we don't have a lot of time to go through what they all are, but generally roofs, painting, waterproofing, plumbing, electrical, fireproofing, fire suppression systems, windows, doors, and the structure itself need to be maintained, and those are the reserves that are becoming mandatory for any budget adopted after December 31st of 2024. The number there for those reserves in the studies that we've done so far is about $196 per month per owner. So we're talking about a $54, $53, $56 increase, whatever that math is, between the current budget amount and the amount needed to just fully fund the structural reserves in an annual budget. Add to that non-structural reserves, and you're looking at another $100 a month for that. So essentially, if you look at reserving for everything in a community, you would be looking at perhaps $297 per owner per month on average. And of course, that's a big average because it's an average type of association, average of all those locations and sizes of communities, but a quite meaningful amount. Now, if an association has not budgeted in the past, and an association is currently budgeting $0, this means, yes, they're looking at perhaps an average of a $300 a month per owner increase to fund everything. So many associations are considering waiving the non-structural portion, which is still allowed. Any waiver of reserves for those items can still be done with a majority of the voting interests approval. So they're maybe targeting to get to the mandatory amount of $196 first, and then we'll add on that other $100 perhaps over time. The thing to keep in mind in non-structural, you're looking at things like air conditioning, elevators, swimming pools, pavement, some pretty essential components to your community, and they are not going to wait until you have the money until they fail. They're going to fail when they fail. They're going to have the board has obligations and needs to repair them. So essentially reserving for them would avoid the need for special assessments for them, but there isn't a lot of leeway in those projects. It's kind of pay now as you go, pay a stable amount, or pay later. That's kind of the whole theory of reserving, but I don't want to get too far into that. Again, just wanted to kind of share what we've learned here. And if you look at it as, well, if we were budgeting $143 a month and we have to go to $196 a month, we're talking about a $50+ increase. Not saying that's not substantial, but at the same time, it's not as bad as I think some people feel that it might be. $50 a month, with all the things that are going on around us is in the marketplace I'm a little bit surprised that it's not much higher. But again, this is the group of associations where we've worked with them in the past, many of them, and many of them are the more proactive associations that have seen the benefit of reserving. We can go to the next slide, Matt. This is just a little bit of a breakdown of that, essentially the increase in reserve contributions per owner per month. This is for the total amount. Again, now both the structural and non-structural portions, you can see actually buildings built in the 90s have seen the highest increase of the data that we've seen. Surprisingly, buildings in the 70s have seen some of the lowest. And I think, again, that probably goes back to some of those buildings have been diligent in the past and are reserving at a higher amount because these are the communities that have been through, and in my experience, they've been through a number of special assessments. They've been through the pain, they've done the restoration projects, and they now understand, that they do have to be setting aside significant reserves. But instead of a $200, a month increase is what we saw on the other slide, they're maybe looking at more like $100 or $125 a month increase to fund everything. Small associations tend to be impacted a little bit higher. I think some of these are higher end buildings, and the bigger reserve exposures there. Also, when you divide things per owner per month, smaller buildings tend to have a larger fee for that. And actually, looking geographically, Central, East, and South seem to be the areas of the state that are impacted a little higher. And I would say the Northeast is the area that's impacted a little bit less. That's just kind of how our data is broken out so far. So Matt, you want to go to the next slide? I want to take a few minutes just to cover some of the common questions that we're getting relating to the funding requirements. Does our association have to have all the funds accumulated by 2025 to fund the remaining useful life of each reserve component? And I think this was a question as well in the Q&A that I saw. Are we going to require fully funded reserves by the end of 2024? And the answer to that is no, not all the funds have to be accumulated, but any budget adopted after December 31st of 2024 would have to have adequate funding to meet the requirements. So many associations are in a calendar budget year. They'll adopt their budgets in October, November, or December. As long as that budget adoption for 2025 happens this year before December 31st, then they're still eligible to waive the reserves, even for structural components, as may needed. They may not even have, to Travis's point, they may not even have the report in hand by the date they're approving it. So this really essentially is impacting 2026 budgets for the most part for associations. Although if they do have the information, I wouldn't recommend waiting until 2026. I'd go ahead and implement it in your 2025 budgets. If you didn't, and some associations have already implemented it in 2024. So we can go to the next slide. It talks about the funding methodology. So lots of questions. I think when the list initially came out, they bulleted out those items I mentioned before. People thought, okay, we have to have individual reserve accounts for the roof and for the painting and for the plumbing and for the electrical. That's not the case. The division has opined, and we agree that the pooled method of reserve funding, the pooled methodology, is still acceptable, which is much to the benefit of associations. So and we're actually going to have a full webinar on the different strategies. There's two methodologies, component and pooled. And then when you look at the pooled methodology, there's like 3 goals that we can try to hit there. A fully funded goal, which is maintaining 100% of the fully funded balances of all the items together, which is the most conservative goal, usually the highest funding requirement. The threshold goal, which is kind of usually in the middle, and then the baseline goal, which just simply means keeping reserves above $0. And all of those methodologies are still eligible or available to associations to use as we calculate their reserves for structural integrity items. And certainly, please, yeah, there's a QR code there, but when I know Matt Martin will be sending out some more notice. I think it's March 7th, right, Matt, of the webinar that we have upcoming. That's going to be dedicated specifically to these funding methodologies and strategies, as there's obviously a lot more questions around those specifics there, and what's the mandatory requirement versus what's kind of nice to have.
Great. Yes, thanks, Matt. Matt is correct. We will be sending emails out to everybody to register for that. Otherwise, if you want to scan the QR code, you can certainly do that as well. Thanks, Matt.
Cool. Next question is, can we change funding levels between updates? So as the law is written and as it's going to continue to remain, the requirement to do a structural integrity reserve study is once every 10 years. And let me back up too, for those that are on the call may not be as familiar. Structural integrity reserve studies are required for condominium associations only and cooperatives. So this doesn't apply to homeowners associations. Structural integrity reserve studies must be done for any community with buildings that exceed 3+ stories in height. So not everyone needs a SIRS, but if you need a SIRS, and a community that must conduct a SIRS must then follow. Essentially, the words are that the budget must reflect the recommendations of the most recent structural integrity reserve study. Now, the interval required every 10 years is quite a long time. And of course, when we're looking at financial plans and estimating, our industry strongly recommends like a 3-year interval between studies. And some communities do it every year or every other year. There is so much that can change in the market, just as we've seen in the past couple of years with costs, labor rates, material availability, and of course, internally to the associations, their goals and objectives can change or projects can come up. So there will be an opportunity for associations to change the funding. This is a question we've gotten a few times. Just because the reserve study says, you've got to replace the plumbing in year 4, if the plumbing's in turns out in good shape, or we have to move it up to year 3. Boards have flexibility to make those decisions on the expense side. But because the statute says the budget must include the funding level from the most recent SIRS, the funding level cannot change, with the exception that it says of inflationary, if there's an inflationary increase in between the in between SIRS studies. So small changes likely will be allowed, but any significant funding changes would not be allowed under the current laws. We've got one more here. And Travis touched on this. This is one of the things we're trying to work with the legislature to recognize, that we don't have probably enough professionals to get all the structural integrity reserve studies done by December 31st of this year. That's the deadline that's set. We estimate, well, first of all, we're estimating probably 30 to 35,000 condo and cooperatives exist in the state of Florida. No one knows exactly for sure. But using some of the data that we've compiled, we were estimating that of those, probably 20,000 associations are have buildings 3 stories or more and would require a SIRS. So it's like Travis mentioned before, it's just a massive undertaking to do studies. It's not we don't have a study factory. It does take time. We've got professionals that work on these, reserve specialists, professional engineers, but and we've got a great team working on them full time, but there's no way we can probably meet all the demand to get them done this year. But trying to get the legislature to kind of acknowledge that, like Travis said, and see if we can get a compliance by signing the contract by the end of this year. But there's definitely a push to try to get everything in as much as possible this year. So I would encourage you not to wait. If you haven't done it, reach out to an engineer or reserve specialist. We'd be happy to provide proposals or information about the firm to understand what this might cost for your association and how quickly we can get it into the queue and get it completed so that you have it in time to meet the requirement deadline.